Hi, my name is Tom Hubble, and this is a financial analysis of 3D Systems. 3D Systems is a leading provider of 3D printing design to manufacturing solutions including 3D printers, print materials, and cloud-sourced on-demand custom parts. Its products and services replace and complement traditional methods and reduce the time and cost of designing new products by printing real parts directly from digital inputs. 3D printers can print almost anything, from personalized medical devices to functional airplane and car parts. Over the past 3 decades, entire industries transformed their design to manufacturing processes using 3D printing solutions. 3D Systems faces several business risks, one of the largest being the costs incurred enforcing or acquiring intellectual property rights and defending against third-party claims as a result of litigation or other proceedings. Claims asserted against 3D Systems can make them subject to significant liabilities and require them to enter into royalty and licensing arrangements that are on unfavorable terms. If the intellectual property becomes subject to piracy attacks, this may harm 3D's business. The loss of trade secret protection could make it easier for third parties to compete with 3D's products by copying previously confidential features. In the future, 3D Systems may acquire businesses in an effort to expand and enhance stockholder value. Acquisitions involve certain risks and uncertainties. Some of these risks include difficulty in integration, unanticipated costs or other problems, potential loss of key employees of the acquired business, and the entry into marketplaces where they have no direct prior experience. 3D Systems has significant foreign revenues. Approximately 44.5% of their consolidated revenue is derived from customers outside of the United States. Changes in regulatory requirements, including tariffs and embargoes, may occur, as well as fluctuations in currency exchange rates. New regulations related to conflict-free materials may cause 3D to incur additional expenses and may create challenges with their customers. The Dodd-Frank Act contains provisions to improve transparency and accountability regarding the use of conflict-free materials that are mined in the Democratic Republic of Congo and adjoining countries. Compliance with these new requirements may also increase costs due to due diligence processes. A cybersecurity incident could also have a negative impact. These negative impacts could include theft, destruction, loss, misappropriation, or release of confidential data or intellectual property. Also, negative publicity resulting in reputation or brand damage could occur. Historically, 3D's common stock price has been very volatile. Between January 1st, 2012 and December 31st, 2013, after giving effect to the 3-for-2 stock split in the nature of a 50% stock dividend, the trading price of the common stock has ranged from as low as $9.82 per share to as high as $92.93 per share. 3D's balance sheet contains several categories of intangible assets totaling $511 million as of December 31st, 2013. 3D could be required to write off or write down in the event of an impairment of these assets resulting from the deterioration of future performance. Such write-offs or write-downs could adversely impact future earnings, stock price, and their ability to obtain financing. Since 2009, the financial situation has improved dramatically. Revenues have increased by 313%, income from operations has increased by 2,000%, and working capital has increased by nearly $300 million. Managers addressed the concern regarding the increase in accounts receivable. Accounts receivable has increased by nearly $19 million since the previous year. However, management attributes this to increases and rising of the sales. The increase in accounts receivable has been proportionate to the sales. 3D Systems has a neutral revenue recognition policy. Revenue is recognized when sufficient evidence of a sale arrangement exists, delivery of the product or service has occurred, and the sale price is determinable, as well as collectability is reasonably assured. Revenue is recognized net of allowances and returns and taxes collected. Inventories are stated at lower of cost or net realizable value. The cost is determined by first in, first out method, or FIFO. The inventory reserve was $4.3 million as of December 31st, 2013, and the reserves are based on management's estimates. In January 2013, changes were made to intangibles, goodwill, and other to simplify the testing of intangible assets for impairment. Under the purchase method of accounting for acquisitions, if the price paid by the acquiring firm exceeds the fair value of the company acquired, The difference is recorded as an intangible asset goodwill. Goodwill is amortized over future periods, thus the creation of goodwill causes for future expenses, and therefore reducing reported earnings. If the acquirer conservatively values assets or liabilities, the company may be able to recognize additional earnings in the near future as its estimates become less conservative. The large amount of goodwill and intangibles on 3D's balance sheet make them a prime candidate for this type of manipulation of earnings. Nearly half of their total assets are accounted for as intangible assets. 3D Systems also holds 90% of their leases as operating leases, reducing their amount of debt by not capitalizing on them. Under GAAP, companies are allowed to use LIFO, FIFO, or the weighted average method as their inventory method. Under IFRS, firms only have the choice to have either their inventory method as FIFO or as the weighted average method. 3D Systems already uses FIFO, so there would be no change in their inventory. Their goodwill method would have to change. 3D has allocated goodwill to identifiable geographic reporting units, which are tested for impairment using a two-step process consistent with GAAP procedures. Under IFRS, they would use a one-step approach, which requires them to test for impairment annually, and it's done by comparing the carrying amount, including goodwill, with its recoverable amount. 3D Systems' debt-to-equity ratio is 0.175 or 17.5%. This is low, and the company leverages many of their assets through equity. The return on assets is 0.04, meaning that for every dollar of assets under 3D's management, they earn 4 cents of profit. 3D Systems' return on equity is around 0.05, and again, that means for every dollar of equity that they are earning 5 cents of profit. Their quality of earnings overall is poor. The stock itself is overvalued. Even after the stock price plummeted over 52% in the last 4 months, their market cap is greater than 400% of their total assets. Their intangible assets, which are subject to significant business risks, make up over 10% of 3D's assets. Goodwill accounts for over 34% of 3D's assets, and combined, goodwill and intangible assets account for nearly 50% of their total assets. This significantly decreases their quality of earnings, as revenue generation is still weak, but growing for the time being. The value of DDD is so high because of their business potential and the potential benefits arising from the additive manufacturing industry as a whole. Overall, 3D Systems' quality of earning is low due to the large amount of intangible assets.